So you're up next.
Oh, yeah. We're live, we're ready to go. Okay, so we'll call the meeting to order, 10:01. And the first order of business is to ask if anybody has any conflicts. Hopefully you've had a chance to look at the agenda. Does anybody need to declare any conflicts of interest? All right, then I would like to entertain a motion to go into executive session to discuss contractual issues. So moved. Mike?
Second.
Judy? Okay, any discussion? All in favor, say aye.
Aye.
Opposed? Okay, Craig votes just let us know, Craig.
It's green and the little thing says you're on.
Okay, so we're out of executive session, and the next order of business is our preliminary financial statements and presentation by Dave Detan.
Okay. Well, thank you for having me today. There's two documents that I'd like to go over. The first one is the independent audit report, which is the bigger of the two documents. And I'll kind of talk briefly about it, and then maybe we can look at a couple of the pages within the document. First off, our responsibility is to provide an opinion, and the opinion is whether or not the numbers, along with all the disclosures within this document, are fairly stated in accordance with generally accepted accounting principles. And we've provided a clean, unmodified opinion with no exceptions. So that's what you're striving for. Congratulations on that. Okay. There's just not going to cover it today, but there's a really nice section, the management discussion and analysis within this document. It's like pages 3 through 6 that kind of give you a real overview of, how did we do this year compared to prior year, and what's our net position and our assets and liabilities. And it really kind of puts it in layman's terms. So it gives you, there's some graphs and charts and really has some good information. So if you get the opportunity, certainly, read through that. In the back of the report, there's a report called Independent Auditors in Accordance with Government Auditing Standards, and that's on page 15 and 16 of the document. This report's required because we're entity that the government in New York State, they require their audits to be conducted in accordance with government auditing standards. So what that basically means is that we have to have certain education requirements as far as, some of the credits that we take during the course of the year has to be specified towards governments and some of the work that is specific to your audit. And that gives us the ability to conduct what's called a yellow book or government auditing standard report. Within that document, there's two items, compliance and internal controls. And so if there are any weaknesses in controls that are considered significant or material, we're required to report that within the audit. And we have two items that we've reported in the past that we're reporting again currently. The first one is adjusting journal entries and assistance in putting together this document. So, we provide assistance in putting this document together. You have us do that. So we complete the disclosures. Those are all read thoroughly by Craig. And then we also provide adjusting journal entries. So really, for the most part, you operate on a day-to-day basis and throughout the year on a cash basis. And that's typical for governments to report on a cash basis. But then at the end of the year, we have to also show our long-term and short-term liabilities, and that all gets reflected within this document. So, we make some adjustments to properly account for those types of items. Okay. And that's really what that item is referring to. Okay. It's not atypical for governments. It's something that a lot of particularly smaller entities look to their audit firm to provide assistance in this area. Okay. The other area is segregation of duties. We're a small organization. We really have, two key personnel and one that's really dealing with the finances. And so you've tried to mitigate controls where Craig's reviewing a lot of the information. The board on a monthly basis gets a lot of financial information. You're reviewing all that. But at the end of the day, there's still, primarily one individual that writes checks, that gets the receipts, that does all the accounting. And so there's a weakness there. And so we're required to report that and communicate that. And That's nothing that's gonna go away. You're gonna, unless you add staff, and again, we're not gonna add staff, if we don't have the ability to do so financially. Okay, so similar comments as to what you saw in prior years.
What other methods could we use to solve that problem?
I don't know that you can solve it. I think a lot of the things that we've suggested in the past, you have implemented, like having somebody review the bank reconciliation. That's probably one of the most significant ones.
You have counter signature.
You have counter signatures. You have, again, financial transactions that are provided to the board every single month that you have the ability to review and ask questions about. I mean, that's all really good stuff. And probably those are the things that you have to continue to have just because we're a small entity.
What about third-party firms? Like I think in the past we've employed a third-party firm that did some of this back office stuff for us. How does that?
I mean, that plays a role. I mean, that could enhance our internal controls and provide a benefit, but you have to weigh the cost benefit. Is that, cost of having that service, outweigh the removing this comment from your financial statement?
That could or probably should solve this problem.
It very well could. Yeah.
Have you seen what other agencies of our size, what they've done, without going as far as hiring somebody else, would it be a third party, or what have you seen done, I guess?
To be honest with you, I think a lot of small entities have just accepted it. Say, yeah, we have an exposure. We're small. We have one person that's integrated in every single financial transaction. And so we as a board, we as, the CEO have to be cognizant of that. Not that we think, that individual's doing anything correctly, but we just have to be aware that that exists. And so when we get financial information once a month, we have to scrutinize it. We have to ask questions. If something looks unusual, we have to just kind of have a little bit higher threshold than if we were a large organization, we had all those internal controls in place. I think the board's involvement would be a lot less. You would get a report from the finance person that has a staff of 10, and you'd say, okay, we understand it. We might still have some questions, but your requirement to look at more of the detail would be less.
Well, we have more of an exposure because we have more money than we've ever had.
That's a good point.
There's nothing there for it.
That's a really good point. Yep. Okay, so that's the reports. Just to walk you briefly through page 7 and 8, these are your actual numbers, the financial statements, and you can see the way this is presented is there's multiple columns, really 2 columns with any activity, and that's the IDA and then ACUC. And then we have a total column, and then we have a total column for 2019. So you can see, like in the middle of the page, last year you had about 4.5 million of total assets. This year that bumped up to 4.7 million. So an increase of about 200,000, and it's all cash. That top line, just as you mentioned, Rich, I mean, you've never had a lot of cash. This is the most.
Never had
any cash. So this is the most significant cash position that you've had at the end of the year. The other big events that occurred, as you can see, in past years, we've had that cash related to the infrastructure project. And that was cash that had to be used for those costs. And due to the construction that was done in the current year, that was finally exhausted in 2020 during the year. In past years, that was used also for construction, and then you also utilize those funds to help pay some of the debt down during years where you didn't have the cash. So basically the cash went towards the debt that was issued that created that cash. Okay. But now it's gone. So it's completely exhausted. In the liability section, you can kind of see your total liabilities actually went down about 3/4 of the way down from 4.4 million to about 4.1 million. That's a decrease of about 300,000. 200,000 of that decrease was last year. We had some of the infrastructure work going on that we just owed the contractors for. And so it was just an outstanding liability that we paid during the course of the year. Okay. The other part of the decrease is we paid down on some of our long-term debt, our bonds and our mortgages. Okay. And so what's left over is our assets actually exceeded our liabilities to the tune of about $650,000. That's the first by far. Absolutely. And we'll see how that got created on the next page. But again, yeah, that's by far the highest net position that you've ever had.
But Dave, you might want to go over the, the mortgages payable current portion.
Yes, good point.
Explain that.
Yep. So in the current year, it was actually right after last year in July of 2000, I guess it would be 19. Or actually, yeah, I think July of 19, you refinanced all of your community bank mortgages, which had balloon payments that were due during this current year. So you refinanced the structure of how those are going to be paid, and it basically pushes out that balloon payment over a longer period of time. Okay. All right, let's look at the next page, page 8, which is basically the income statement, statement of activity. You can see, again, same format. We've got 3 columns. Maybe just to cover that middle column, the ACUC had total support and revenue of 125,000. Most of that was, again, the reimbursement from New York State to pay for a portion of the infrastructure. And then we have operating costs that total 120,000. So we had a small increase of about $8,000 in ACUC in 2020. Okay. You can see the IDA, we had total support and revenue of $1 million. That's basically, if you look at last year, was under 500,000. So basically doubled our revenue. Okay. And most of that revenue was in that top line fees. And we had a lot of projects going on, right. Solar for the most part, that brought in administrative fees for us working on those projects. And then you can see our rent income, which is about 250,000, which was pretty identical to the prior years. And then this new line called Economic Development Services Agreement of 225,000. And that's the contribution from Allegheny County. It's a 2-year agreement, and this is basically half of that agreement. So it's in total over 2 years will be 450,000, 225,000 each year. And so again, support and revenue doubled. Our expenditures, if you kind of take out ACUC, because there wasn't really any activity last year, our expenditures last year were 440,000. This year they're 460,000. Pretty comparable expenditures in 20 versus 19. So what that meant is we added to our net position by the tune of about 550,000 in 2020. Okay. Pretty darn good. And cash flows on page 9, again, this is very positive. You can see, we drove positive cash flows from operations to the tune of over 600,000. We had some improvements that we made that totaled 200,000. We repaid long-term debt. And doing all that, we still had a positive cash flow during the current year of $200,000. Okay. So that's your numbers. And then the next so many pages of the document are the notes to the financial statements. Biggest note is the long-term debt. And as Doug mentioned, when you read through note 5 on page 11 and 12, it'll show you all the amortization schedules of both your bond and your mortgages. And all those mortgages were refinanced. So again, last year had big balloon payments that were due. Those got stretched out and termed out over a period of years. And therefore, all those schedules changed. Note 6 talks about your operating leases that you have, most significantly the ones with Allegheny County for the Department of Aging. For the most part, you've got contracts in place. You can see the little chart on page 13 through 2035. So you have some contracts in place until at least then. Okay. And then note 10, Economic Development Service Agreement, is just a paragraph that's new this year that references the new agreement that we have with Allegheny County. Okay. So that's really your financial statements. The very last 2 pages of this document is what we've referred to as the management letter. And basically the management letter has a couple items of food for thought, things for consideration. You do have, we have forecasting, which we've always had, like, can we plan out what our revenue and expenditures look like maybe over the next 2 or 3 years? And it's always a good practice to do. Doesn't mean, our forecast is always going to be what happens, but it gives you a little bit of a lookout to what it could look like. In-kind contributions, we do have some in-kind salaries and benefits, and we're just always recommending to review those amounts, make sure they're still reasonable based on how much time our folks are working for the IDA versus working for the county. And the last item is pilot agreements. You do kind of operate as a pass-through entity for certain pilot agreements. Your largest one has had a lot of hiccups throughout the way, and we're just recommending to continue to have focus and review those and ensure that what's coming in ultimately gets paid out. I don't think anything happened in 2020, but I believe it started back up in 21.
They paid half of what they owe
In 21.
all the way. So they paid $300,000.
Exactly.
Promised to pay the next $350,000, I think it is.
Yeah. And so the pilots
But that's the only one that comes through us. All
Exactly.
the rest of them go directly to the county.
go directly to the county. And so that big one, there are past due amounts that's always been recorded on a more of a cash basis. Like, we haven't recorded the big amounts owed because, it's always been uncertain as to whether or not it's going to come through or not. And so it's really been operating more on a cash basis. So there's nothing reflected in 20, but as Craig mentioned, in 21, you're going to see a big payment come through and then go out to the various municipalities.
Dave, why do we have to show the CRC and the ACUC on our Allegheny County IDA financials?
Good question. So basically, because there's overlap of board members, basically, those 2 entities are considered component units.
Even though they're not the exact same board members, there's an overlap.
Correct.
So if the majority of the ACIDA board members are on 1 or 2 of those, then
Yeah.
okay.
Exactly.
So that's the trigger, the board.
Well, there could be other factors, even if you don't have full control. If there's financial control, that could also warrant it be considered a component unit as well.
Okay, so management control or financial control?
Correct.
Okay, so whatever we suggest, you have 2 separate boards and.
Potentially, but ultimately, if if, the IDA wants to have involvement in ultimate say, that might be hard to do.
Dave, when does this report become final?
Probably after this meeting.
And
Yeah.
then we can put it up on the website.
Correct. Yep. The last document is what we refer to as the governance letter. So this letter basically outlines some of the accounting that's performed during the course of the year. It talks about, any corrected or uncorrected misstatements. There were adjustments, as I mentioned, that we had to make. They're in the back of this document. So you can see those adjustments that were recorded. It's just a note that we had those. If there were any issues as far as disagreements or information that wasn't provided us when we asked for it, we would have to disclose it within this document, and there were no such items. So it's really, a clean letter to those who govern, but it's a required communication to provide to you. Okay,
Yes.
and that's it.
All right, thank you very much.
So, yeah. Any questions?
Are there any edits that we need to make? Because they will make those and then make it fine.
We need to vote on this, I'm sorry.
Yeah, I think we should vote
Should vote.
to accept it, yeah.
Okay, Mike, make a motion to accept the financials. Do I have a second? Okay,
Okay.
any discussion? Okay, all in favor, say aye. Aye. Opposed? Okay.
All right.
Thank you.
Wonderful.
All right, thanks.
Thank you very much.
Thank you, Dave.
Yep,
Really
thank you.
appreciate it. Good to
You're welcome.
see you.
Thank you.
Thanks for coming down, appreciate it.
Oh, no problem. Thanks for having me.
Please come back so you can travel.
Yeah, exactly. Finally. See you later. Have a good
All
night.
right, take care. Okay, so the next item on the agenda is approval of the minutes from June 10th, 21. Do I have a motion to approve the minutes? Skip? Judy? Okay, any discussion? All in favor, say aye. Aye. Opposed? Okay, next item is abstract report. I'm looking for a motion to approve the abstract. Judy? Doug? Okay. Any discussion? Questions? Okay, all in favor, say aye. Aye. Opposed? All right, and the last part of the treasurer's report is banking and financial summaries. Need a motion to approve those?
I'll move it.
Mike
I'll second.
and Skip, okay. Any discussion? Yeah, all in favor, say aye. Aye. Opposed? Okay, and I don't think we have anything in the building maintenance report, right, Craig?
No, everything's going fine.
Okay, so the next item on the agenda is executive session for discussion of contractual issue. May I have a motion to go into executive session, please?
So moved.
Judy,
I'll second.
and Skip second. Okay, all in favor, say aye.
Aye.
Okay. Craig, let's Skip.
Second.
Okay, you're green, okay. All right, so now we're on to the action item section, and the first action item is the approval of the UTEP. I'd like to table that today because we just had the hearing yesterday and we haven't had the chance to read the report. There's not much of a report, but Craig's gonna give us that before the next meeting. So we can consider the comments from the public before we approve the updated UTEP.
Did you get any comments?
Three or four people.
There were three people here, Patricia Gay from Willing, Norm Ungerman, and Russ Hall from Town of Friendship. And they were basically no real comments on the UTEP. They really weren't in favor of giving any breaks, not just from us, but any breaks on solar projects.
But I think we should just all.
That's what they really said.
I think we should all kind of consider that before we vote on this, since that just happened last night, so we'll table that. Resolution authorizing assignment and assumption, right field, and Craig's going to explain it. There's a change in ownership, I think, that is triggering this, but.
Yeah, the bright field, if you look through the package, the reason that this got triggered was it wasn't so much the actual LLC, it was the fact that the company that owned the LLC got bought out. So basically, there's a different company now that's the owner. It's not that they transferred the LLC, the company bought out another company. The company that was originally developing Brightfield Solar through the LLC has changed ownership. So that's why it's unusual that we have to do this.
So we are being asked to approve this resolution, right? So if somebody would like to make a motion,
Yeah, I'll,
Mike? Second.
I'll second.
All right, Doug? Any discussion? Okay, this is a roll call, so Judy?
Question?
Oh, I'm sorry. Sure.
I'm just trying to find the name of the new owner or,
Nautilus Solar.
oh, thank you, okay. Roll call, yes.
Okay, Judy said, voted yes, okay. Mike?
yes.
Doug?
Yes.
Okay, Randy is absent. Skip?
Yes.
And I vote yes. All right, thank you. The next item on the agenda is one we haven't seen before, and this is a resolution amending our approving resolution for the Lewis Road Solar Project, and this was triggered by a change in construction costs. We've never done this before, and our attorney has advised us that we should amend the approving resolution and, to reflect the higher construction costs.
And they felt it's significant enough. It's about a 7% increase, but they changed enough of how we were going to build the project. They thought it's significant enough that we should do a new approving resolution.
But I don't know if we're setting a precedent here. I don't know if we want to just table this, or if we want to approve it. I mean,
I think we're gonna see a lot of it because everything's going up.
that's right. So do we want to do this? I mean, really, the only reason we would need to do it is to collect a higher fee.
Did we have that on the original agreement?
The positive part, it is a higher fee we would get, but the other thing is, the reason she mentioned doing it is if we ever got an audit, we want to make sure that we're approving a project and everything that publicly we said that the project is going to cost more money.
So should we put some kind of a mechanism in place where we're checking before every single closing to make sure that we know what costs are going to be and that we do a amending resolution every single closing? I mean, that's really.
We have to do that.
No, we shouldn't
Because
have to. It's only going to come up if they bring up a cost change.
If who brings it up?
The
The contractor.
contractor.
Okay,
Yeah, the developer brought it up at the closing is what happened.
okay. So do I have a motion to approve this?
Well, question first, Rich, what is the benefit to the owner here? They get increased,
Actually, they don't get increased, they don't get increase from us because they're actually not even using the sales tax. So there is no benefit to them in just being accurate.
so it's a paper exercise?
Yes,
Exactly. Okay.
it's making sure that our files show that we acknowledge that they said the estimate went up.
Okay.
Okay, so would anyone like to make a motion to approve this?
I'll move it.
Judy? And a second.
Second.
Skip, okay. Any further discussion? All in favor? Oh, no, I have to read the roll call, I'm sorry. Mike,
Yes?
Doug,
Yes.
Randy is absent. Skip,
Yes.
Judy,
Yes.
and I vote yes. All right, thanks, everybody. Okay, Craig, do we have a micro enterprise grant update or not?
We've gotten, the only update is we did get draw number 4, and the Department of State is very pleased with the process, so we'll be able to get hopefully more funds in the fall.
Okay, great, thank you. Good work.
And just so you know, they're gonna do a couple more articles in the paper about that, so we'll get some good press about that, because those 6 companies are actually doing very well. So,
Great. Okay, the next item is solar project updates. Did you want to give any updates?
the only update I have is the Whitesville projects. Moya said they may be delaying at least a few months. It could even be a year, depending on what we just talked about, cost overruns. They may not be moving it quite as quickly as they were planning. That's the only update. Everybody else is still on schedule.
Okay, thank you. And Alliance update?
Yeah, just,
Oh, sorry.
Just an interesting note on solar projects. A number of towns now have declared moratoriums on solar projects.
Right.
To shut the projects down until, give them 6 months to review local ordinances. And I guess there are more and more objections to solar projects.
Okay.
People just don't want to see tens of thousands of solar panels across the fields in their town. So be interesting to see how that works out.
Yeah.
Well, that's what we kind of brought up last night, is there are people now objecting to the whole concept of it, actually.
Okay.
That's interesting considering private landowners. What are their rights and what are the rights of people?
Well, that's what the town boards have to figure that part out.
Right, and what's happening with a lot of them, Allegheny County is only about a third zoned with all of our municipalities. So until they put something in place, they don't have any say on what the private landowners are doing.
Sure.
So these developers, technically without those laws in place, they don't even have to approach the town. And they're just doing it by due diligence, because when there is zoning in place, they're just following the same procedure that they typically would. So even if the town is objecting without that law in place, they can't do anything.
That's why we're encouraging all the towns to have a solar law. Not that I'm saying it.
Well, if the town is against it, then the developers aren't gonna get a pilot.
Well, they can actually do a
From us.
moratorium. Yeah, and I've told that to everybody, and we're like the last bastion. I mean, basically, they have to approve a host agreement, and they have to approve that they want the project before they even do anything.
But we're not gonna support something the town doesn't want, and that's gonna make.
But that's the
project
question
fall apart.
that Mike is saying. A lot of the boards are trying to say, well, we don't know if we support it, so they're putting a moratorium.
Like it or not, it speaks to the need for zoning ordinances in every town if they want to control what's going on in their towns.
Yes, and we've seen a lot of that too, on the planning side of things, where, the municipalities that do have zoning are realizing they don't have any ordinance in there related to this renewable energy and the projects that are coming, and so they're all looking at updates in their zoning, and some of them are, the ones that don't have zoning, they still don't want zoning, but they at least want these, the renewable energy laws in place. So
But the
that they
point
have
is-
some sort of control.
The point is, some of the towns at least have zoning ordinances, and if it's done properly, we did a, probably 100-page zoning ordinance in Grove. And what we plugged into it is if the project doesn't fit any of the other criteria listed in the zoning ordinance, it's subject to review and approval. So it kind of got around the requirement for specifically mentioning windmills or solar or whatever, so. But the point is, more and more towns, I hope, are realizing if they want to control what happens in their community, they need a zoning ordinance.
Okay, the next item, Alliance update.
Yeah, I sent out an Alliance update, which I sent out some dates and correspondences I've had with Alliance and the CEO. And primarily, as you see the summary, we've got the first payment in April. They originally promised the second payment in May, didn't happen. And the latest, they gave a promise in June, which didn't happen. And they said that that one was delayed because they had a security breach of their bank account. And I've got a couple calls into them right now, including both their CEO and their accountant, to find out when they're going to pay another payment, because they originally said they would pay something last week, but I have no update as to when they would pay the remaining $359,393.
Okay, thanks, Greg.
So you have the full documents to how much they owe, what they paid, and where we are.
One question I had, just to refresh my memory and maybe others. The new, agreement that they want to have with
Right.
us, is that, how many years is that? And
It's right here, it's attached.
it's attached?
Yeah, it gives you the actual up through 2029.
Okay, that's a long time. Long. For somebody that's not.
We're not agreeing to that today, right?
No,
It's not, we don't agree until they pay what they owe us.
they have to pay the
Arrears.
full amount in arrears before that goes into effect. And they know that, so.
Okay, we don't have anything under new business. I just wanted to mention that today we received a request for reimbursement from Marsh Acres, which will be submitted to Great Lakes Cheese. Anything for the good of the order? Okay, and the motion to adjourn, please.
So,
Mike, Skip second, all in favor?
Aye.
Okay, thanks, everyone. And Craig, let me know when we're done.